Thank you and good evening, everyone. Hopefully I can provide an informative overview of Singapore Medical Group. So a little bit besides what was mentioned about myself, don't know whether that was clear, but I'm actually a medical doctor by training. But the last thing you want to do is see me over the last few years because I've been practicing medicine for about 15 years. I've been more or less a businessman in the last 15 years, running businesses, in multinationals. But then again, my passion for healthcare brought me back to healthcare in 2013. And that was primarily through Singapore Medical Group when I came back as a major shareholder as well as the CEO of the group. So myself, my partners took over the group in 2013, even though that this company has been listed since 2009. The previous owners wanted to sell out, and we came in, we took over the group. It was a company that was not in a good shape. And again, I think what's unusual about us is that my background, my partner's background, my team's background, gives us a unique perspective into healthcare, and it gave us an opportunity to sort of remake the company. So the good news is that we've since turned around this group from a loss-making status in 2013 when we took over into one that's now fairly profitable. Not only has it been profitable, but I guess we've been fortunate in that we are able to make fairly astute investments and grow the company, and also turn around what was loss-making healthcare business into a profitable business. Over and above the fact that we are able to turn around the business, we are also able to now, in a much healthier position, make acquisitions on good healthcare businesses. And when you look across Singapore, the healthcare business has always been a very stable business in good times, as well as in bad. It's always fairly robust. I'm particularly happy to be in the healthcare business because, again, for the last 15 years we spent in the IT business, and the IT business obviously has its ups and downs. And one of the things that I learned in the last sort of 3 years is that the healthcare business is actually a very good business. We've grown sort of a fairly large network. Primarily, we're in the specialist space. Again, we're not a hospital owner. We don't own hospitals. We don't own assets. We're an asset-light business. We run clinics. Most of the spaces that we're in, we rent. But again, the healthcare business is a very good business. It's a very profitable business. And essentially what we saw back in 2013 was that corporatization of healthcare was just going to begin. And honestly, I think we've more or less been in the driver's seat in terms of driving this corporatization of healthcare over the last few years. I see a lot more opportunities. I see that the consolidation of healthcare, because of high rents, because of staffing issues, because of the complexity of the healthcare market, because of the decline of medical tourism, is just only the beginning. So I'm excited and I'm honored to obviously be very much involved in this space. So again, we've grown the network over the course of the last 4 years. We've turned around a company that was unprofitable into one that's now very profitable. And we're in a great position to grow this company across over the next few years. What is SMG? Essentially, SMG, again, we're very much focused in the specialist space in the private sector. We are not, I think we have a very small footprint in the primary healthcare space, the GP space. We are primarily in the specialist space. Specialists, when I mean disciplines like cancer care, like women's care, like pediatrics, like orthopedics, and so forth. And we run clinics, we employ the doctors. We run these clinics very efficiently. We're very focused on making sure that we yield the maximum yield that we can, because again, real estate in Singapore is very expensive. We just had a presentation prior to this about industrial REITs. We're very conscious of the fact that obviously rentals in Singapore are very high, so we need to make sure that we maximize our revenue and so forth in terms of the space that we use. One of the areas that we've again expanded into is around women's health for many reasons, because again, actually it's more than women's health, it's women's and children's, primarily because again, we're dealing with a younger audience, again, women who start from anything from their teenage years all the way across to when they age. But at the same time, we've just recently made an acquisition in the pediatric space, and I'm particularly excited because obviously there are synergies across the women's and children's space. One of our strategies is to make sure that we bring healthcare a lot more accessibly to people who are in the suburbs. So besides the fact that we're in most of the major centers across Singapore, namely Orchard, Novena, Glen Eagles, and so forth, we are also very much existing in the suburban space. So we have clinics in Tiong Bahru, in Jurong East, in Bishan, and I think we're definitely going to grow a lot more in the suburban areas, both in women's as well as in children's care. We have also identified, when I say aesthetics, it's a little bit confusing because when I say aesthetics, it's primarily direct to consumer business. One of the trends that we're starting to see is that with the advent of the internet, with Google, with Dr. Google, a lot of patients, and I'm sure most of you in the audience today, you generally do your searching for your healthcare on the internet prior before you see the doctors. You know quite a bit about the people that you're going to see. You know what sort of profile the doctors have, and I guess we have also realized that that's an area that we want to get really good at. So as a result, SMG as a whole, we're a little bit more forward-thinking because we realize that this particular direct-to-consumer healthcare space is very important. And that's why we have businesses in dental, which is again more B2C, LASIK, as well as the general aesthetic space. So this is an area that we see some growth, but at the same time, we are conscious of the fact that when there's a slowdown in the economy, things will generally slow down. But at the same time, when times are good, this is an area that will pick up. Whereas in the previous business that we talked about, the health business, both in good times and in bad, things generally chug along, right? And mind you, 80% of our business is primarily in the specialist healthcare space today, whereas 20% of our business is in the aesthetic space. The last area which we are very focused on today is an area that, again, we've been very fortunate because, again, as a company, we've always identified opportunities where, regardless of whether it's a good business or not so good business, we take a view. And the diagnostic space, the diagnostic imaging space, in particular radiology or X-rays and MRIs and CTs, is an area that we believe that had a lot of potential for growth. We were fortunate to, again, make an acquisition in this space just 2 years ago, where we bought over a business that was unprofitable. But again, within a space of about 6 to 12 months actually, we managed to turn this business around and make this profitable. Right? So again, it highlights the ability of my team to execute on our strategies and to turn around businesses, which I think is again very unusual in the healthcare space. So we've been successful in taking a center which primarily existed in Paragon from a loss-making status into a profitable status in a very short period of time. And we are now obviously very aggressively growing this business, and we see a lot more potential to grow this business. And in fact, we were so optimistic about this particular space that we made a second acquisition within 6 months in another healthcare cluster, which was Novida, and we're growing that now. So within a space of less than 18 months, we took a non-existing imaging business into one of the largest in Singapore in the private sector. Again, highlighting the execution abilities of the team that I have. The financials have been nothing short of spectacular from my view. When I first took over the business in 2013, it started as we had to shrink the business. We had to get our costs in order. We took what was a $20 million business, and you can see in FY14 we've more or less doubled the business. So within a space of less than 3 years, we've doubled the business, and not only doubled the business, but taking the business from a loss-making position, and actually a fairly significant loss-making position, because what was not highlighted here was the 2013 situation where we essentially took a $7 million loss into a net profitable position of about $2.4 million by 2016. So, if you do the compounded growth of that profitability, is actually pretty significant. I think, again, you can see that all the statistics here point to the fact that we've improved the business in a significant manner, and particularly, we've done this effectively by growing the business where we see that there are opportunities, and making sure that also the business today is very robust, is very healthy, is generating cash. In fact, our cash position is extremely strong. And not only that, you can see that our gearing ratio is strong. In terms of longer term outlook, I think I've started by saying that the consolidation in the healthcare industry is only just beginning. I'm a very strong advocate of that. I'm a very vocal advocate of that. I think that in the private healthcare sector, there's going to be a lot more acquisitions. And definitely companies like ours, who have proven themselves that we've been successful in execution and in turning around bad businesses into good businesses in the healthcare space. I think we're very well positioned to take advantage of this consolidation. And we are certainly, as a group, going to definitely be making a lot more acquisitions over the course of the next few months, years. We're definitely going to grow the company, and we're definitely going to grow the company a lot more profitably. We are also taking the view that, and I'm a very strong advocate of this. You'll see a lot of press articles from me that says that I think I think we are wasting our talents of what is probably the best medical team in Asia, bar none. I'm talking about Singaporean doctors here. And I want to be able to take Singaporean doctors and make them famous in the region. And particularly in regions where, countries like Indonesia, Malaysia, Vietnam, where we see a lot of medical tourism that come to see us. Already, I think you've probably read in today's articles about medical tourism, where we are still market leaders, but we're starting to see declines. I'm one of these believers that we should really take advantage of the situation while we can, and we should try and, besides attracting medical tourists to Singapore, but again, strong medical institutions from Singapore should actually reach out to the respective medical tourism countries. And again, Singapore Medical Group strategy is absolutely to do that. So we've actually taken the view that we want to invest, and we have invested in countries like Indonesia and in Vietnam. We've actually acquired clinics, or we've built clinics from scratch we're in a great position where we can take the best of Singapore healthcare out into the region, right? Because it's only a matter of time before the region starts catching up, and we've already started to see that the region has started to catch up on us. So again, this sort of ecosystem of mergers and acquisitions, and again, when I buy stuff, I buy with the intent that I make sure that I'm in a market leadership position. I buy to get big enough so that I'm famous enough to go out in the region and say, hey, look, I have the best of breed care that I'm taking into Vietnam or in Indonesia. I buy because I want to grow faster, right? And it's about buying and making sure that I grow a whole lot faster so that I can drive the degrees of profitability to reward my shareholders. So that's more or less the crux of the strategy that we're trying to employ. Again, I can't but sort of emphasize that it's not just all talk, right? It's all about making sure that we execute to the strategies that we've put in place. It's all about making sure that we deliver the levels of results, not just to us as major shareholders, but also to our investors, like yourselves. We have, obviously over the course of the last sort of less than a year, seen our share price more than, go up about 5 to 6 times, which is fairly significant in this space. I think that hopefully highlights the fact that the team that we have, the ideas that we have, and the ability to execute and deliver the levels of result are clearly there. I think this lists down some of the things that we've done over the course of the last few months. And needless to say, the team and myself have been very busy. And I just want to end there. I want to give you guys time to sort of ask questions about the business, and I'm happy to answer them. Thank you. Sure.
Good evening. I have 2 questions for you, actually. So, firstly, from what I can see from your current location of your specialty clinics, they are located near Novena or Orchard area, which is mostly the preference for medical tourists to visit. So, you mentioned that you expect a decline of medical tourists in going forward. So, what's your current estimation of your the proportion of medical tourists contributing to your revenue, and what do you expect going forward in 2 to 3 years' time? And another thing is that you mentioned about the M&A strategy that you're going to regions such as Indonesia and Vietnam. So do you believe that it will help you capture more growth, more growth in terms of patient numbers? Or will it somehow cannibalize into the medical tourist traffic that you receive in Singapore?
Okay, so let me answer the second question first. So 40% or so of our patients, depending on certain clinics, because again, it depends on certain disciplines, right? So like cancer, it can be as high as 50% are medical tourists, whereas some of the more domestic problems that we see, whether it's women's health or whether it's ophthalmology, we see maybe 15 to 30% of our patients that are overseas. Right? Our historical medical tourism markets are obviously Indonesia, but we've never actually, as a group, been very dependent on Indonesia. We've always actually gone after new markets like Vietnam. So we've actually got a very strong presence of Vietnamese patients. Now, when I look at the Vietnam market, I'm looking at only about 3% of the audience, or the top, income strata in the Vietnam audience. So to answer your question about why we are going into these countries is because we believe that by going into these countries, we can get at the other lower strata of income. So I can, for example, go after now the top 10% of the income strata. And we're starting to see that clearly. For example, recently we took our famous cancer doctor out to Vietnam. And for those of you who might not know this, but Vietnam happens to be one of the youngest audiences around, but it also happens to be one of the highest cancer growth markets in the world. Right? So because we took one of our top cancer doctors out there, obviously it was very well received, and in the interim, we're going to see a lot of patients that come from there. Right? So having that foothold in Vietnam is very unique because it gives us the ability to then take doctors or famous doctors out there and to make them even more famous. Right? So, clearly there are going to be a lot more opportunities for us to grow in this space. I'm very excited in particular about Vietnam. Again, when you see all the things that we've done, we've made very astute investments. Right? Whenever we buy something, we either buy it cheap. Right? Don't want to say that, but it's true. And then we are able to turn the business around and we're able to make it even more efficient and to yield for us. Right? Or we believe that if we are buying something that's good, we're buying good people, and we're able to grow a whole lot faster. Okay. So I'm running out of time, but maybe I can just take one more quick question. Sure.
First and foremost, I'd like to thank you for the job well done. All right. And you and your team. So my question here is that since the business is doing well and you have a very high market segmentation sometime in Vietnam, when do you foresee there will be any dividend payout?
I'm one of the biggest shareholders. I can't wait to pay myself dividend as well. So I think as long as we see that there are great investment opportunities and there are low-hanging fruit to grow the business even more, and to realize even more profitability, I'm not going to pay dividends. Right? So I hope that just clearly answers what you're asking. Right? So I see so many opportunities right now.
Thank you.
One more.
Yeah. Can you comment on this partnership with Korea's CHA? Because you haven't mentioned.
Yeah, no. I mean, I'm very excited again. We've been courting each other for a long time. I think it highlights, again, this is, for those of you who may not know, we've got a strategic partnership with one of Korea's largest women's groups, right? They have 10 hospitals, they own 10 hospitals. But Korean healthcare is a little bit funky because it's not for profit. So again, these hospitals are not for profit, but again, they bring a tremendous amount of technology, they bring a tremendous amount of unique ideas. We are going to partner to grow the opportunities in the women's space in the region. A lot of these ideas haven't been announced yet, right? So I want to hold back a little bit on that, and in due course, we'll talk about some of the ideas that we have to grow the various businesses in the region. I'll hint at some of them. Definitely in the idea space, we see a lot of unique technologies that we can implement. And again, I've talked about the young population in Vietnam, for example. Right? So clearly we see pockets of very unique opportunities in the region, and we're going to go after them with the right partners. Cha is an amazing partner because, again, they're very well capitalized. They've in fact just raised in excess of $130 million or something like that. And most of that's going to come to our region to fund expansion and growth opportunities. And we are certainly going to be helping them implement some of these strategies. Right? So just watch that space, because I'm excited that there are going to be a lot more opportunities. I think we're done. So one more last year.
You seem that you're interested to buy many things, so where do you get all the fund?
Well, again, Cha put in $15 million into SMG. And again, from last year, we were generating a lot of cash. So I think more than anything, we're in a great position right now. We are probably one of the healthiest and well-capitalized healthcare companies out there. We've got a great team, we've got great ideas to grow and expand, not just here in Singapore, but clearly in the region as well. I hope that answers your question. You can look at our balance sheet, but our balance sheet is probably one of the healthiest across the world right now. And funding is not really an issue. Right? So it's identifying the right opportunities. It's making sure that these opportunities fit into the strategic perspective that we have. And we'll make sure we execute on that. Okay, thank you. Thank you very much.
Thank you.